Welcome to Markets Now. I'm Michelle Roque with Kent Beadle, Paradigm Futures. Seeing a lot of green on the board in both grain and livestock futures during the early portion of this session today. Kent, thanks for being with us. And we are seeing some follow through buying in the grains after a very strong day yesterday. Wheat was the leader. We were putting in some weather premium, but with crop conditions actually going down, how much more premium do you think we need to put in that market?
Well, I think that we may have done as much as we need to do from a weather premium standpoint today. We do see the extended forecasts have some moisture in it. I think that the marketplace is going to be very interested to see the progression of those forecasts and whether or not the odds of having a more substantial rainfall in western Kansas and in Texas, Oklahoma panhandle start to play out, because they really need the rainfall in that part of the world. The decline in conditions yesterday, I thought, was pretty substantial, certainly more than the trade was anticipating. But it's only one of the wheat stories. Where weather premium is part of it, and we've got weather issues other places around the world, as well as a resumption in escalation of hostilities between Ukraine and Russia.
Absolutely. When we look at the crop ratings, though, SRW winter wheat versus HRW wheat, it's kind of a tale of two different crops here, isn't it?
Yeah, the rainfall that they've had in the Eastern Corn Belt has been more substantial, and as the soft red crop came out of dormancy, it had a very nice period of time with adequate moisture and decent temperatures and a pretty good growth spurt. And so, that wheat is actually looking really, really good, according to the clients that we work with in that area. And they're looking for good yields, which, to be fair, in soft red winter, they have a tendency to have. It's just a better growing area than you have in southwest part of the U.S.
Yeah. So how bad is, the southern plains into the, it's mostly into that southwestern Kansas, Oklahoma area where they're seeing the toughest conditions. Is that right?
Yeah, that's the area that have missed out. There have been parts of Kansas that have gotten some moisture, but the western part, and then as you move south into panhandle of Texas and Oklahoma, that's where the areas have been worst. And there's a lot of residual dryness, even with the break of the drought that we had last year. We did not adequately fill up subsoil moisture to the extent that we could go through another period of dryness this year, and that's really what we've been seeing.
What are the global production issues that we're trading right now? It's not just the US. Europe, Black Sea, even India is having some issues, aren't they?
Yeah, we hearing a lot of interesting things out of India. You don't always get great information out of there, but we're hearing that they're trying to do an inventory of where they actually sit, and that's not going particularly well, and that they may have less than they believed that they had. And so there have been some estimates that they might need 2 to 5 million tons of imports, which is really not on anyone's radar. In addition to that, Black Sea has been fairly dry, especially in parts of the western part of the Black Sea. And then you get into Europe, and they've been a little bit wetter. And everyone is also watching Australia, because this transition that we're having from El Nino into La Nina, we had a couple of not very good Australian crops in La Nina. And, that becomes a bit of a concern for the trade as well. It's still early. Of course, the winter wheat crop is just getting planted down there.
Is the market also putting in some Black Sea war premium?
Yeah. So there were some drone attacks last, I believe, late Friday night. And then again, reportedly, there were one or two more through the weekend at two different ports. And that's, again, an escalation. It's happening at the same time that Ukraine is probably going to be replenished with some funding from U.S. for additional supplies. And, it just feels to me like that is a situation that could boil up again here this summer into something more significant.
Absolutely. So wheat leading, corn and soybeans to the plus side, are pulling those two parts of the complex along with. We did get above some key moving averages though. So technically, how do we look? Can we keep the momentum going?
Yeah, in corn, we managed to close above the 50-day moving average, and fairly substantially. It was one of the best days that we've had here in quite some time. And getting some follow through here this morning sort of makes that chart look like a breakout. Now the soybeans are a little bit different. The 50-day moving average is still above the market in beans. We're going to go up and potentially test that area today if we get a little bit more follow through. But that's an area that's kept soybeans, I would say, tethered to that area for the better part of the last 3 or 4 weeks.
So technicals are one thing. Can the row crops keep going if wheat keeps going when you have fast planting progress, or are we going to need a weather issue there coming up?
Yeah, so that's interesting on the planting progress. We are ahead. There's no doubt about that. 2 percentage points in corn, and I think 4 percentage points in beans. But we do have a fairly sizable system that's going to get everybody parked back in the shed here with their planters this weekend. It's going to start in Iowa on Thursday and move across the belt into Illinois and Indiana, Ohio on Friday, Saturday, and it looks like there's enough moisture that it could set us back anywhere from 3 to 6 days based on the amount of rainfall they're talking about. That's a double-edged sword at this time of the year because, to be fair, soil moistures have been short, and we could use the rainfall. It will be very beneficial eventually for early growth and development, but getting in later, of course, has the obvious result of pushing pollination back a little bit. And there are still a lot of concerns about what La Nina is going to bring this summer for potentially hot, dry weather later on in the summer.
I'm also curious how far you can extend these rallies, as far as how much farmer selling do you think we're going to see, especially as we go into first notice day and option expiration?
Well, a couple of things about that. This particular first notice day is turning out to be a lot different than the March first notice day. If you remember, March-May corn spread moved all the way out to 15 cents as we approached first notice day, and that spread has been tightening up instead this time around. It's trading at about 9 cents, 9.25 cents today, and that's significantly different. We also are looking at the average U.S. basis at about 16.5 cents under the May futures, which is the strongest basis levels that we've seen this year. So I do think that this rally will loosen up some cash bushels from the country. Although farmers are, obviously kind of busy planting right now, but farmers typically only have an average amount of corn plus or minus 5% any one year based on USDA statistics. And so the idea that there's this huge flood of corn out there that's just waiting to move and is going to bury the market is something that I think is a little bit misguided. There will be some grain that'll move, but I don't think it's going to be out of the ordinary for normal this time of year.
Okay. What about the cattle market? Nice close yesterday, especially pushed by the cattle on feeder report and those bullish placement numbers. Can we keep going there, though?
Well, I think we can because we liquidated out a sizable amount of that long on this correction that we've had over the last 3 or 4 weeks, and so there are bullets from the speculative side of the market. Obviously, the fundamentals are still fairly strong, and that cattle on feed report, just put an exclamation point on the strong fundamentals that we have in front of us here. So, we've been trying to work our way through the heavier weight cattle, and as that starts to occur, it sets itself up for, I think, a pretty sizable rally here as we start to move through the summer.
Okay, well, it looks encouraging from a chart perspective. Did the hog market get help from cattle yesterday? Will it keep getting help to move higher? And, can we go back and retest the contract highs at all, do you think?
I do think we can retest the contract highs. I think that there'll be, an awful lot of interest in getting hogs hedged at those levels. And I think some of it is going to have to do with, what a meal and corn prices do as well, and what that underlying margin suggests that hog producers ought to do. But we have a fairly sizable discount in terms of pork on a value basis relative to beef. And I think, ultimately that if the beef is going to rally, it's going to continue to pull the pork on up as well.
Absolutely. All right. Thanks for joining us, Kent Beadle with Paradigm Futures. Remember, futures and options have substantial risk and are not suitable for all traders. I'm Michelle Rook with Markets Now.